This is Terms of Reference. I'm your host, Stephen Laddick. You don't have to be in development or aid to know that mobile has been disrupting banking for a while. But those of us in the sector are acutely aware of how mobile banking has literally changed the lives of millions of people by providing financial access to even the most remote areas. And the results have been, generally speaking, fantastic. As just one example, we know that people who have access to mobile banking are more resilient to shocks and emergencies, which is a potential game changer in many parts of the world. While it's well established, the use of mobile in the banking world is far from complete. In fact, it's still just beginning. Where it's going next is the primary focus of Xavier Faz, my guest for the 128th Terms of Reference podcast. Xavier is the lead of the Digital Financial Frontiers Initiative at the World Bank, where they look to leverage innovations around mobile phones and mobile payments that allow new services to be delivered. I spoke with Xavier in Washington, D.C. And hey, before we dive into the episode, if you like what you're hearing, take a moment to open up iTunes or Google Play or Stitcher or whatever your podcast app happens to be and click on subscribe. Also consider giving the show a rating. It really does help. And finally, please consider sharing this episode or the podcast on Facebook or Twitter to help others get in on making aid and development better. Now on to the show with Xavier. Hello, Xavier. Thank you so much for being on the Terms of Reference podcast today.
Hello, how are you?
I'm well, thanks. Where do we find you sitting?
I'm in my house right now. It's 8 p.m. here in Washington, D.C.
Excellent. And as our listeners know, I'm on the other side of the planet. So, it's 7:15 a.m. for me here in Bangkok. So we're having different life experiences right now, to say the least. Xavier, you are the lead of Digital Finance Frontiers Initiative at the World Bank for CGAP. I think that there's probably quite a few people who are listening to this podcast right now who are just envious of the title, first of all. But they're really interested to know what exactly does that mean. So why don't we start out by you telling us first a little bit about how you fit into the CGAP initiative and then what Digital Finance Frontiers means to you.
Sure, absolutely. So first of all, thank you for having me here in this conversation.
My pleasure.
CGAP is a small organization within the World Bank that is focused on financial inclusion. As you know, the World Bank has many areas in which it works, but it works primarily with governments. And the work CGAP does is broader in the sense that we can work with different kinds of organizations, including governments, but also private sector actors. And the work we do focuses on trying innovations, specifically in the financial inclusion area. Financial inclusion has to do with bringing financial services to very poor people, and with the theory or with the thesis that that enables them to be more productive and lift themselves out of poverty. So CGAP is about financial inclusion. And within financial inclusion, there are a number of areas that are important or that need to be addressed. The Digital Finance Frontiers agenda, which is the work I lead, has to do with leveraging innovations around mobile phones and mobile payments that allow new financial services to be delivered through the phone. So that's the area that I work on and that I'll be happy to tell you a little bit more about.
Sure. So most of the people listening to this podcast are fairly savvy in knowing that mobile banking solutions are something that have been around for a little while now, especially in Africa and Kenya, super popular. Where are we at? Why don't we start with where are we at today with mobile banking? Why don't you give us your overview on that?
Yeah. So for quite a few years, mobile banking appeared and suddenly developed into something very big. But a lot of the people that work in the field, we were very weary about where was this leading. Is this a fad? Is this really going somewhere? Can we really rely on mobile payments and mobile banking? And it seems like we are now really well in a stage where we can pretty confidently say that it's an established business model. The organizations that drive it are making money off of it, and they're running sustainable businesses around it. And currently, the GSMA, which is the global organization that aggregates telecommunications companies, telcos, they publish an annual report that describes the landscape of mobile banking. And they showed that in the latest landscape they showed that there are more than 430 million accounts of mobile banking, delivered and operated through mobiles, 430 million. And of those, about 30% are active accounts, meaning people that do at least one transaction in the last 90 days. So it's pretty big. It's a large movement, and it involves a lot of people, many who are poor.
Maybe a naive question, but equate that to me with what we would think of mobile banking in the developing world. Is it the same thing? Like, I can log on to my bank's app right now and move money or pay bills or those kinds of things? Or are we talking about essentially the same thing or different kinds of services?
No, it's quite different, actually, in a number of ways. So, you and I sitting in our house, in our offices, everywhere you go, you have access to internet, and you can access your bank account whenever you need to, or at any time of the day. And you don't really need to do it over the phone because it's easier to do it over your desktop. If you are a very poor person in a very rural area, you're really essentially disconnected from the rest of what happens in other part of the world. Or in the nearest city, or you're disconnected. It's not easy to interact with the rest of other people, except when you do that physically. So the mobile becomes your primary means to talk to others and connect. So the providers that offer financial services through mobile means that they allow people to do transactions over very basic phones. These are not, for the most part, and not yet, most of these phones are not smartphones. They're what is called feature phones. And the kind of interaction is through menus. So you click in a code and then you get a menu in the screen, and you can select 1, 2, or 3 functions. And menus are nested out, so 2 or 3 levels within, and you can choose different functions. But primarily doing mobile banking in Africa or in some countries in East Asia means that you first have to go to a physical point of access where you provide physical cash, and that is deposited into your account. And when you have the money into your account, then you're allowed to transact directly over your phone to do different things like sending money to somebody else, receiving money, checking your balance, paying bills, for instance.
And now, what's been the sort of greatest disruption or the big aha that's happened over the last 4 or 5 years as you've been watching it? Is it simply that people are catching on and trusting it? Is it that nested menu system just offering more and more services? What's been changing and evolving?
There's a big aha and a big disappointment.
I always love it when there's 2 of those.
So the big aha is that people use it, right? You would have 5 years ago, if you were sitting down, or maybe 8 years, 10 years ago, you would have predicted that it would be very difficult for a poor person to trust a phone and to use put their money into the phone and use it to transact. So you would have predicted that the trust issue would have been a significant barrier for adoption. And not only the trust, but also the fact that you have to click in a number of codes. And these are not really simple codes. I mean, you have to remember the order and patterns and the asterisk and things here and things there. It's not all that intuitive. I would have said, this really is not going anywhere. But it's surprising. The value is so strong. The value proposition of being able to send money to somebody that is in a distant place immediately and without many complications. That value proposition is so strong. People use it, and some people use it for many purposes.
Have you seen I apologize for cutting you off sort of mid thought, but has it reduced the need for cash as well? Because having been in many of these places myself, cash is still king.
Yeah, no, cash is king, and it will be king for many years. I think mobile money has solved a very clear necessity of being able to send money to another person that is, distant. But that's only one narrow need, right? People do many other things with physical cash that are more easy and convenient, and it's very hard to substitute digital money for those other things. So while it has solved a clear necessity, it has not solved all the necessities, right? So it's very still the time where you do everything with electronic money, it's still a bit far away. So nevertheless, it does solve one problem, and it solves it very well, which is the ability to send money to another person that is physically distant. So that is important. And the fact that it happens immediately, it means many things, right? For instance, you can, if suddenly on the other side of the country, your cousin has an accident, his child has an accident and needs money, you can immediately send him some money, right? And the whole family, even if it's dispersed geographically, can pitch in to solve a necessity. So that is one example where people who use mobile money are more resilient to shocks than people who don't use mobile money. So it's a clear example of value. And so that has been a big surprise.
Does that also go to the next deeper level, apart from shocks and emergencies, to investing in a business or buying a taxi cab or a car or investing in education?
There's many ways in which mobile money is being used today, and the value proposition of those other cases varies. It varies if you are a person that lives in very far in a rural area or if you are a person that lives in the city. So there's many ways in people use mobile money. And yes, in some cases, it helps to make payments for education. For instance, in many schools in Africa, education, even if it's a public school is not free. You have to pay a school fee every 2 or 3 months. And when you pay that fee, you have to do it in a bank branch. And banks don't have many branches. So it means, paying for your school, for your kids' schools means you have to physically go to a bank branch in some town that is 3 or 4 hours away. You spend all morning traveling, and then there's huge lines outside the branch. I mean, it's very costly just to make the school payment. So mobile money eases that in a very significant way. So all those kinds of transactions that normally involve physical traveling are very, that's where mobile money has very, important value. So for those use cases, people use mobile money, and this is across all segments of the population. Very poor or very rich, no matter what. For that use case, people, there's a lot of people that use it. So that has been a big surprise, that no matter the difficulties and the sort of clunkiness of the interface at the front end, people still use mobile money. Now, the big disappointment has been that, we all imagined that if people had electronic accounts and they used them, they put money in them and they moved money around with their colleagues or with their, people they do business with, we all imagined that there was a very small step from that to financial inclusion, right? Mm-hmm. We all said, well, if the account is there, then the cost of acquiring clients has already been paid for. So now banks can, easily offer savings account, term deposits, investment options, credit, insurance. So it was all this imagination that it would be a marginal cost and it would happen pretty naturally and organically. And the big disappointment is that this has not happened. And people are being payment included. So there's payments inclusion, but not a lot more.
My first thought there, and it's kind of a question I've had on the tip of my tongue here for the whole conversation, is who do people think they're banking with? Is it the mobile company? Do they believe that they're connected to the actual bank, or is it some third party? And then I guess the sub question there is that the trust issue, or is that, does that lead to the reason why people aren't, more a part of the inclusion equation?
I think there's several factors playing or at play here. I think for the most part, the telcos that have gotten licenses to offer mobile money services, they have gotten the license to offer those electronic money accounts. So it's no bank. There's no bank offering that service. It's the telco.
So it becomes like the financial division within the telco, essentially.
Well, the telco creates a financial division, and in many jurisdictions, they have to create it as a separate company. And that company is the one that offers the mobile money service. And it's not a bank.
I was just going to say, it's a pseudo bank. Yeah.
They are able to take money from people, and that money has to be fully redeemable and cannot be intermediated. And there's different dispositions in the regulation that ensure that that money is not in the balance of that company. Right? It's off balance and it belongs to the people that provided those deposits. It's sort of like deposit accounts, but the bank cannot do anything with them. And the business of those accounts is just to move the money from one account to the other and offer payment services. So that's how the electronic money regulation works. And that enables, if you create the right regulatory framework, that enables different kinds of companies to offer those services, even if they're not banks. But it's important to do that because different companies have different infrastructure and assets that could be valuable to have wide distribution of payment services. And so telcos are very well in that class of companies that, without being a bank, they have the right infrastructure to deploy at scale payment services. In Africa, it's been telcos, but in Latin America, it's retailers, and in Asia, you may have third-party agent companies, etc. So in different countries, the actual player offering might vary, but it's the same service in the sense that it's an electronic money account with payment services around it. Does that make sense?
It absolutely makes sense. So in my background research for this interview, I'm explored some of the work that you've done under this initiative at CGAP. I specifically noted that your team has put it out there that this is what you work on. How do you extend this digital finance piece to include things like utility payments, education payments, et cetera, and then also how you rethink the relationship between the client and the service provider, or the individual and the bank, essentially. Did I get both of those right?
Yes, absolutely.
So the obvious question for me, or the question I like to ask here on the show, is what's the next 3 to 5 years look like? Is this taking hold? Are there real solutions that you're ready to put on the table, or is it still nebulous?
Well, I might like to tell you a little bit more of what's in the middle between now and the next 5 years.
Perfect.
So there are 3 big things that we work on, and which in combination should lead to a broad range of services being delivered to poor people through the mobile or through mobile payments. And these 3 things are related to the barriers that we see happening in the market. So let me describe these 3 things. One has to do with what we call open APIs. Open APIs is a relatively technical, geeky term, but it has
I just got to tell you that everyone on the show just got so excited that you geeked out. Thank you so much.
Well, let me explain. So APIs are the technical interfaces that allow different systems to interconnect, right? And there's a lot of APIs. Every piece of software out there, every platform, everything has APIs, and it allows third-party developers to connect to an established system and interact with it. In this particular case, when you think about mobile money, the services that are out there is not really, money in the sense that, like the money we have in our pocket. It's a representation of money. It's a closed service. It's one telco telling you, I offer you this ability to have an account and move money between accounts, but these are my accounts. And so if you have Tigo Money, you have, if you work with Tigo, you have Tigo Money. If you work with Airtel, you have Airtel Money. And so these are services that your telco provides to you, but it's between you and the telco. It's a closed service.
Let's just say that's just akin to saying, hey, I've got Thai baht in my hand and you have US dollars in your hand, and so we have to find an exchanger for we have to have some intermediary, or there is just no intermediary to exchange that?
Yeah, so the situation is like that. So one thing that is happening, it's happening now in the markets, is telcos are beginning to talk to each other and establish ways in which they interconnect between them so that Airtel money can be transferred into Tigo accounts, and and that there's interoperability in the exchange of money. And that's very important, and it's going to be very useful because if you, no matter which operator you're using, your money can travel across systems. So that's very important. What is not happening is, even when those interconnections are beginning to happen, third parties outside the telco world do not have clear and open access to those platforms. So if you and I were in Kampala, Uganda, and we had this great idea about a service that we wanted to implement, and offer to, in the market, like a startup, we wanted to create a startup, we would have a huge, barrier. It would be very complicated to be able to connect our system to the Airtel money system to be able to receive payments. And the same happens across different markets. It's not Uganda, it's across markets. Entrepreneurs, those guys who really have good ideas that want to offer them and leverage the millions of customers that are already using the mobile and mobile wallets, it's very hard to have access to those services because those are closed services. They're not platforms. Mm-hmm. So one thing that we're working on is we're working with mobile money providers to create a layer outside the mobile money system that enables third parties to connect to the platform and interact with the customers of the mobile money wallets and offer them, all sorts of services and be able to interact with them. And if this happens, if we are successful opening those platforms, then it'll be easy for players in each market to start thinking about the applications that people need and start creating those applications, sort of the long tail of the market. Many applications that are narrowly focused, but they are very specialized and good for the users.
So yeah, so it's the app marketplace basically you're talking about.
Is the app marketplace, exactly.
For mobile banking.
And it could be app based on smartphones, or it could be pieces of software that can be used on a feature phone, and you can interact with those pieces of software through USSD codes. So there's different ways to solve the front end, but in general, it would allow more third parties to innovate. So that is one pillar, one area we work on.
Super awesome.
Second area has to do with driving innovation, right? There's a lot of technologies that are being tested out there. If you go into the fintech world, there's a lot of new stuff coming in, but it's very hard to say, well, what aspect of that is relevant for poor people? Which of those technologies will change things for a poor person in Africa or in Asia? So in that work, what we're doing is we are looking at the technologies that can create more opportunities for poor people, reduce the cost of delivery, or create stronger engagement. And we're testing those technologies and creating data points to show the world the value of those technologies.
I'm thinking of a country like Kenya, right, where you've got a fairly robust developer base. It's technologically savvy, especially in Nairobi. Those people in Nairobi are definitely connected to their families in rural Kenya. So the mindset of, hey, what would help the poor should already be there, or has the real high potential to be there. Do you have specific examples of one or two of these innovations that are bubbling up that you guys are either supporting or waving the flag and rallying around?
Yeah. So let me give you one example. We're looking at satellite data. Satellite data has been available for quite some time. But what is new and emerging is satellites that are streaming photos that are taken more frequently. And that allows you to do analysis of how farmers in specific areas are cultivating the land and how the harvest happens over the year. So if you're a farmer and we can process the information about your farm using satellite data analysis, then we can quickly see the yields, more or less assess what kind of yields your farm gives, and therefore assess your capacity to pay for a loan. And that unlocks a significant type of loans that today don't really exist, because today loans given to farmers, either are very expensive because somebody has to go physically to assess the farm, or they're very small because they're based on the assets of the person, not on the ability of the farm to produce. So
go ahead. Sorry, finish the thought.
Yeah. So it's using satellite data and emerging satellite data that enables us to predict the yields of farms and provide loans that are better suited for the needs of farmers. That's one example.
Okay, so one question there. So you unwittingly stumbled into quite literally an area where I've worked, 20 years ago, right? And one of my first jobs was working on technology for farmers in the United States. And remote sensing, what you're talking about, was just an emerging thing in the 90s. But we were also using GPS devices to use to map soil sampling, to map harvest yields. has the mobile phone world, remote sensing, what you're talking about right now, and more frequent pictures, that's definitely a step in the right direction. Is there, I'm just thinking, I'm looking at my mobile phone right now, and it's a GPS device. It's got a camera, these kinds of things. Is there an application there where the farmer could go out and just basically take pictures from around their field and send them into somewhere, or just have it automatically upload to make the satellite obsolete?
Well, I don't think that's going to be the case, but pictures, the ability to have GPS readings in your cell phone and to take pictures, it's being tested in different ways. For instance, insurers, if you have a cow, you might be able to insure the cow, and the cost of that insurance might go down if you're able to send a picture of the cow every month.
But then you need a reminder system. I can see where some of the hiccups would be, but I probably just put us down a rabbit hole we don't need to go down. But yeah, that's interesting.
There is a space of things that need to be tested, and the mobile plays a significant role across technologies, right? Some technologies are not directly connected to the mobile, like satellite imagery doesn't require the mobile. But other new technologies, are deeply around the mobile channel. For instance, everybody knows that reminders, through SMSs you can get reminders. And one thing that is more new is the ability to interact with customers on sort of a chat, but it's sort of a smarter chat. And when you use that with customers on a massive scale, we have proven, there's data that proves, some of our experiments show that, but not only our experiments, that creates significant trust with customers, right? When a customer asks you a question and you're able to respond to it fairly well and quickly, then the customer feels that the provider is there. And
sure, they believe that they're a real thing, that they care about them. That they're actually responding to their individual needs. That's great. Mm-hmm.
Exactly. So creates a trusting relationship and makes people more engaged in the products that you offer. And in financial services, that's important because a savings account, a term deposit, a loan, all those services involve a close relationship with the customer, right? Whether the customer is going to repay a loan over time not only has to do with whether he's going to have the money to pay, but whether he's going to prioritize that payment above other urgencies he might have. So being able to maintain that close relationship has significant impact in both the patterns for saving, but also the patterns of repayment for loans. So technologies that use interactive SMS to maintain a close relationship with millions of customers through a computer, a centralized technology, help reduce the cost and maintain a close relationship with customers. And that has impact in the business model of financial services.
Take me to the third area. So you got open APIs, driving innovation. What's the third area that you're working on?
The third area has to do with the nature of the problem we're trying to solve, right? For many years, financial inclusion has been about bringing financial services to poor people because financial services are important. We all agree on that. But financial services are important, but they are even more important when they are able to solve a direct problem, a tangible necessity. And what we start seeing now, there are business models that are not financial services, but are enabled because they have a financial service embedded in it. One example of this is the pay-as-you-go electricity, solar power that is paid for using PayGo. You might be familiar with this.
Not me particularly. No, I'm not.
Okay. Well, there's a technology that is called remote lockout. And this enables a provider to install a chip in a solar home system. So imagine a solar panel that you install on the roof, and it has batteries and it has 4 lamps, and it has a chip that you can control remotely to turn it on and off. So you can collect payments and people get the electricity that they pay for. So if a person pays you 3 days worth of electricity, you turn it on for 3 days and then you turn it off. And over time, people are paying for this in a pay-as-you-go basis for electricity that is generated at their home.
Right, and I guess you're We actually did have another guest on this podcast. It's a company called Takimoto Gas, and they had a pay-to-play thing with generating of gas and then electricity, specifically at the home as well. So this model we have heard before on the podcast. Now that you've jogged my memory on it, thanks.
Well, so it's a simple model. Now, let me tell you how that links to financial inclusion, because that is about electrification, right? If you install, that system and people pay for it on a pay-as-you-go basis, basically you're offering electrification. But what happens is that these systems cost $100 or $150. Some cost more than that,
which is a lot of money.
It's an amount.
To a rural.
It's a lot of money, and and most people wouldn't be able to pay for it. So the only way to sell those things is if you finance them. Now, because most people that need these systems live in rural areas and they are poor, they don't have collateral, then offering these systems on a finance basis means giving them a loan and doing something to be able to ensure that those loans are paid back. So the fact that you combine remote lockout with pay as you go, that enables people to pay according to their cash flows. And essentially what startups are doing in Africa is that they are giving loans to very, very poor people, and they install the system in their homes, and people can pay for it on bits and pieces over time. And so it's a financed asset, and people gain access to electricity. But over 1 year or 2 years, they also demonstrated that they could pay a loan for $100. And then the companies that offer this essentially have transactional data, and they are able to assess the ability to pay other loans for those same people. So these companies that started selling solar lamps are transitioning into consumer finance companies, because once they finance the lamp, then they can finance the bike.
Sure, because they've got a credit history. I mean, it's a credit report. They can predict who could. Yeah, that makes a lot of sense.
Yeah. So so as these companies start electrifying large areas of rural people, they also start creating consumer credit data, and they start offering other loans, and they become sources of finance for people who were completely outside the financial system. And mobile money plays an important role because it enables these remote payments and remote transactions.
As the World Bank, as the CGAP initiative, as in your role, what does it mean when you say you are working with these telecoms or these innovation providers? Essentially, is it a funding role? Is it a technical assistance role? Is it some combination of a bunch of different things? Because it sounds to me, especially in the mobile banking world, as you just, you said at the top of the show, there's a lot of money already there. There's profitability. People, they're making it. So what's, how are you pushing them along? Is it just saying, hey, you got to keep pushing the envelope and you're offering some carrot or something, or how does that work?
No, actually, so our role is to look at markets and identify the obstacles and help the markets figure out what might be the ways to address obstacles. And so sometimes it involves doing a lot of research and just putting a lot of data out there so people understand where the opportunities are. So maybe in some cases it involves, a publication might describe in great detail what are the needs of poor persons that are not being met and demonstrate that a poor person can pay for a service, right? So in some cases, a publication will go very far in illustrating an opportunity. In other cases, when we look at a market and we analyze the dynamics and understand how business models work, we can see a constraint that, for instance, to give you an example, the solar systems that I told you about, they cannot grow unless there's debt financing. So we're working with local banks that can, under certain schemes, can finance these companies. So we're trying to demonstrate what are the ways in which things can be solved, and we publish this for the benefit of the market. What we do is public good. We're not in the scaling business. We're more on the producing solutions.
Mm-hmm. And do you find that your publications, are you traveling to, around the world regularly, sort of knocking on the door of telecoms and banks and saying, hey, here's some great ideas? Or is there, what's the mechanism that you get it out there besides putting it on the web?
We've been around for quite a few years, and we've created a recognition in the market around, we focus on solving certain problems and creating knowledge products that are useful for industry. So our website is sort of a resource center that is already positioned as a resource center in industry. So a lot of telcos come to our website for solutions. And a lot of researchers and academics and development agencies, when it's about payments and it's about mobile and technology and financial services, they come to us and see whether we can help. So a lot of what we do is through our portal, we publish knowledge products. But at the same time, we work in the field running pilots, doing research, because that's what drives our learning.
Great, and we'll put the address to your portal on the blog post with this podcast as well, so people know how to click and get directly there. The last two questions that I have for you are the two of my favorite questions, because I always love to see what the answers produce. But who do you pay attention to? You are one of the top experts in the field of financial inclusion, especially in digital services. So who do you pay attention to when it comes to new ideas or what innovations are taking hold or whatever? Are there blogs you follow? Are there publications you follow? Are there conferences that you absolutely must attend? Where do you get your information?
Well, I think all of what you said are true. We work globally, and there's a lot of countries, and there's a lot of markets, and there's a lot of stuff happening. So you cannot really stay abreast unless you are, reading a lot of blogs, reading a lot of articles, specialized magazines, be in the circuit of conferences. But also one source that we find, it's essential, is going out to the field and talking to the people out there, right? And the providers, the innovators, and we have the luxury. We get funding from development agencies that fund us to do this kind of work, and it allows us to travel, go directly to the source of the problems, and learn from a first, direct way about the problems and the issues and how different people are thinking about things. So we spend a lot of time in the field talking to people and providers and innovators, and that's a very important source of that balances out all the idealistic things that a lot of times we hear on the conference circles, or you get a connection to the ground that it's important.
I got to ask before my last question. I'm going to break my own rule, but has there been a time when you flew into Myanmar, you flew into Vietnam, or you flew into whatever, Uganda, and there was something happening there that the conference circuit wasn't aware of, and you guys were like, oh my gosh, look at this. This is amazing.
I'm sure it has happened. I don't think something comes quickly to my mind. I think what most happens is the other way around, right? You go to conferences and people speak of things, including us, including CGAP. A lot of times we generalize and we speak of things as if they were always applicable in certain ways. And when you go to the ground, you find nuances to things. So when you go out there to the field, you find out that some of the general things that you hear about, well, yeah, it's true, but not exactly like that.
My last question for you is, it's an opportunity for you to geek out in a completely different way. And you spend, the vast majority of your time thinking about financial inclusion, about digital financial services. Is there something outside your day-to-day work in the area of innovating for, basically helping those in need, for humanitarian aid or development, that you think is just super cool and that other people should know about?
I think there's a lot of things that are completely not tried out yet. I think cell phones are very powerful devices. I think the experience at the front end is very important. There's a lot of things happening between a person and a cell phone. And I don't think we finished exploring that yet. Smartphones are beginning to flood many of the emerging markets, and they're becoming cheaper. And when poor people start interacting with smartphones, and they get access to news, and they get access to interesting content in different formats, and they can speak with their friends and chat, it surfaces a lot of other opportunities of many products that could be useful. I think that there's a big area of opportunity that is emerging as people gain access to internet and gain access to smarter and more powerful devices.
Xavier, our time on these podcasts is always too short. I feel like we could continue our conversation for the next 2 hours and not cover it all. Thank you so much for being on the show today, and I hope that we get to continue the conversation in the future.
Absolutely. Thank you very much for inviting me. Happy to have had this conversation.
You've been listening to the Terms of Reference podcast from 8preneur.com. Subscribe to us on iTunes.